Hi, I'm Ed Fulbright, CPA, CGMA, PFS of Fulbright Financial Consulting, PA. We would like to welcome you to our educational briefing.
The economy is starting to show signs that a good surprise might be underway. The Manufacturer Purchasing Managers Index rose slightly from February, remaining strong compared to its history. Of course, only about 14% of the U.S. economy is tied to manufacturing. The much more important non-manufacturing Purchasing Managers Index dipped to 56.1 in March from 59.7 in February, but it's coming off an extraordinary period and remains strong compared to its history. The economy created 196,000 new jobs in March, confirming that February's plunge in job formation was just a quirk. Unemployment remained at a historic low, and this is really important. Expansion of the labor force, plus accelerating growth in average hourly earnings, paints a very favorable picture for driving growth in consumer spending power, the key to unlocking America's growth. The wage numbers for March were met by uniformly tepid headlines. The financial press ignores inflation when covering wage gains. Real wage gains have been the major economic story of the last 5 years, but it's been consistently ignored in the press. In the first 5 years after the Great Recession low point, average hourly earnings grew about 2% annually. But in the next 5 years of the 10-year expansion, wages rose at a 3.2% annual pace. When you factor in inflation, real wages have soared over the past 5 years. Over the 10-year expansion, spending power has increased by 12%. The black line shows the inflation rate has flattened, while wages steadily rose, producing a real rate of wage growth that is very high compared to recent decades. As this gap between average hourly earnings and inflation has widened in the past 5 years, real wages have grown at a very healthy pace. Just 3 weeks ago, the consensus of about 60 top economists was for a weak 1.3% growth in the first quarter of 2019. But the early indication of a good surprise has appeared. The Federal Reserve Bank of Atlanta estimates GDP growth dynamically based on publicly available data. With the first quarter over and the release of the actual figures only 2 weeks away, the GDP Now estimate for first quarter 2019 growth of 2.1% is much higher than the 1.3% consensus estimate of the 60 economists polled just 3 weeks ago by the Wall Street Journal. To be clear, the actual GDP figure to be released in 3 weeks may be 60% higher than the consensus forecast. This could be an early indication the economy is stronger than expected.
Thank you for listening. Please contact us with any questions, and also contact us if you're interested in our complimentary second opinion on your investments or to set up a meeting regarding your wealth. Don't hesitate to share this video with people who might benefit from our work. Thank you again, and have a great day.